Good morning. Uh, Let me turn the heater off. I just recorded how to fill up 1045 for your business, and we went through 1045 page 1. So when we are done filling up 1045 page 1, you'll answer the questions on schedule B, which is on the next page, and then you'll work on schedule K. So we start working on schedule K, and I ended the recording because I was out of space on my card, and now we are going to work on schedule K. So let's get started. So let's look for our schedule. I believe that's this one. So we work on our page 1, our schedule B, and our schedule K. We need to fill it up with information from page 1. So we need to put our ordinary business income from page 1, line 22 here. So let's go look for that information. And that's line row 22 is 5. That's the profit. Go turn the TV on. To what TV? Mommy is working for now, okay? So we have $5. We'll put it here. My kids just woke up, so you'll be hearing more of mommy intervention here. Hopefully not too many. So 1 will be 5, and that's pretty much what we need to put here, because we already put our information on page 1. We don't need to fill up anything here. But if we have interest from our checking, our banking saving account for that business, we'll put it here. Otherwise nothing will go there. And assuming that that's just the soap business, in our instance here, our schedule K is done. We don't need to fill up anything on schedule K here. The instance when you fill up a lot of information on schedule K is when you don't fill up page 1 at all for those income, because it's not a trade or a business, but it's a passive income or a portfolio income, is when all your information will be on schedule K. But when it's a trade or a business, you fill up page 1, and then you just fill up schedule K with the net revenue. Now let's move down. As we don't have anything else to put on schedule K, we don't have this number here to put there. We have 5 profits. It will be here. And they are partners. We are partners. So let's go look for, what is that? Is analysis of net income. So let's go find where we should put the partners' profits. Let's see if we're able to find that. It is one that sometimes can be confusing the way Iris explains it. And that'll be under Schedule K. So figure down. I'm not seeing it here. Yeah, let's go down again and see before I go up. Analysis of net income. Okay, so it can be very confusing here sometimes, but let's see what they are talking about. For each type of partner shown, enter the proportion of the amount shown on line 1 that was allocated to that type of partner. So report all amount for L.L.C members on the line for limited partner. Did you see that? Report all amount for L.L.C members on the line for limited partner. That's one important point here to keep in mind. Because our business is a L.L.C, that's where that will go. The sum of the amount shown on line 2 must equal the amount shown on line 1. In addition, the amount on line 1 of analysis of net income loss must equal the amount of on line 9 Schedule M. Yeah, so that's if you're filling up those, but that's good to know as well. So in classifying partner who are individuals as active or passive, that's what I was getting into. The partnership should apply the rule below. In applying those rules, a partnership should classify each partner to the best of its knowledge and belief. It is assumed that in most cases, the level of a particular partner's participation in an activity will be apparent. So if the partnership principal activity is a trade or business, which this example is, classify a general partner as active. And we don't have a general partner because that's an L.L.C, but if that's just a partnership, you'll have a general partner. So you'll classify the general partner as active. If the partner materially participates in all partnership, trade, or business activities, that's the condition. Otherwise, classify the general partner as passive. If the partnership principal activity is a trade or a business, I think that's one is what the one we read. So if the partnership principal activity consists of a working interest in an oil or gas, well, classify the general partner as active. So if the partnership principal activity is a rental real estate activity, classify a general partner as active. And let's see what we will talk about. They are talking about the general partner quite a bit. So if otherwise, classify the general partner as passive. So if he didn't participate materially, classify as passive all partners in a partnership whose principal activity is a rental activity other than rental real estate activity. So that's good things to keep in mind as well, if that's related to you. If the partnership principal activity is a portfolio activity, classify all partners as active. And we read before about portfolio activity. Portfolio income is interest, dividend, royalties. So if you have business that generates those revenues, streams, those streams of revenue like dividends, interest, or royalties. You classify partners as active. So classify as passive all limited partners in a partnership whose principal activities is a trade or business or rental activity. Sometimes you can find those things very confusing. So for a limited partners, classify everybody as passive. So if the partnership cannot make a reasonable determination whether a partner's participation in a trade or business activity is material or whether a partner's participation in a rental real estate activity is active, classify the partner as passive. So that's why you get confused. It get confusing. So, well, for a trade, they want you to classify all limited partners as passive. But the thing is an L.L.C. So, and then they want to consider the general partner as active if he materially participates. But for L.L.C, you don't have general partner. You have all are partnerships. So report all amount for L.L.C members on the line for limited partner. Did you see that? Report all L.L.C members on the line for limited partner. But then, so all the amount for limited members, for L.L.C members will be under limited partner. But then they say here that if classify as passive all limited partner in a partnership whose principal activity is a trade or business or rental activity. So in our case that we are making soap and we want the soap to be an L.L.C, we'll choose passive. Let's go back there. So report all amount for L.L.C members on the line for limited partner. And now they say that report classify as passive or limited partner income if the business is a trade or if the activity is a trade or business, something like that. So that means here is where we will put that, and that's 5 for each partners. Yeah, that's 5 as well for the total. So that's where it will go. And if it was a portfolio, what did they say again about the portfolio? So if the partnership principal activity is a portfolio activity, classify all partner as active. So that means if it was a portfolio and you have a L.L.C, you still fill up the limited partner, but you put the total amount here for the portfolio. And for the real estate, what did they say? What did they say for real estate? So classify as passive all partner in a partnership whose principal activity is a rental activity other than real estate activity. So the real estate is down here. So classify as passive or limited partner in a partnership whose principal activity is a trade or business or rental activity. Doesn't say real estate. So if the partnership cannot make a reasonable determination whether a partner's participation in a trade or business activity is material or whether a partner's participation in a rental activity is active, classify the partner as passive. So the last section is important too. If the partner's principal activity is a rental real estate activity, classify a general partner as active. If the partner actively participate in all of the partnership or rental real estate activity, otherwise classify a general partner as passive. But what about limited partner? They didn't say anything about that though. but I think the limited partner for the trade or business or rental activity, even for the real estate rental activity, is going to be passive, because if you want your rental activity to be classified as active, it will fall under the same category as the trade or business. So that would be that. And they say to put all the amount for LLC members under limited partner. So that's just the option that is available for rental properties owners and traders and business owners. So let's go back to our things here. So we have that 5 there, and that's pretty much our schedule K is done. So let's see if we can fill up schedule K1 very quickly here. So schedule K1 will be just for one partner. So you'll put the business information here and the area we will send it to, and we will put and by the way, I like to put this from the instructions. When you are reading the instructions, if you come across where to file, you will just write it down on your envelope so that you can find it later easily. So it's right on top. And I will put the instructions on my website so that you can download up. It might have those highlights in it as well here. So you just need to look up the amount and the states and see where you fall under, and copy the address and put on the envelope. So, and you will put the where is going there, the partner social security number, the partner's name and address, and if that's member managed LLC, because you are managing it yourself, you'll fill up G. But if you have somebody to manage it for you, that's a manager manage LLC, so you will fill up this one instead. And H will be domestic partner, and you'll put the share ownership percentage there as well. And you may not be required to fill up this, but I like to fill it up. But that's pretty much what you do. So this, I'm going to change it, but beginning capital account, let me see here, I can take those things out. And current year net losses, and those that this will be pretty much that 5. If you contribute capital during the year, you'll put it here, otherwise it will be 0. And the beginning capital account, if your bank account at the beginning of the year was what, $112, $120, that's why you'll end there, you'll add there. If you didn't take anything out of the account, so pretty much your total will be 125, just in an example. So, and the partner didn't contribute any property. And keep in mind, in fact, this one shouldn't be 5, it will be half of it. So it will be just 2. And that will be 122. And 120, it will be these shares. If I do it right, I can just put 60, which is half of it, and this will be 62, because you are using the percentage, 50% of what the whole amount is. That's pretty much that. And if we go up, originally loss, it will be 2, because we have a profit of 5. That will go there, and that'll come from that page 1, no, that line 22, or even better, that'll come from your schedule K. So if you look at the schedule K again, because schedule K1 is just a replica of schedule K, but for each partner, so you use this 5 times 50%, that's 2.5, which is 2. or 3, whichever you choose. And we don't have anything else to put here because we didn't fill up anything else on it on our schedule K. So we won't have anything here to put in it here. And that's pretty much it. Our schedule K is done. So a lot of time when your information are going on page 1 or 1065, which is a trade or a business, and you don't have any other activities that are passive income on your under your business, once you put it in on page 1, you don't have much to put on schedule K, and you have much to put on schedule K1 either. You just fill up line 1 for schedule K and line 1 for schedule K1, and this one is done. So we just save it, and when you print things out, you'll print schedule K out. You'll have 3 copies, one for this partner, one for the business, and one for IRS. And you'll have to organize it in a certain way. This is 5 pages, 1055 is 5 pages. Let me open it here. Talking about 1055 is 5 pages, and you'll print it out. Make sure you sign the return. You'll sign the return at the bottom and date it, and select no. You can take this one out of here and select no, and you won't have anything here because you are doing your own taxes. So the pre-preparer will be blank, and you'll sign your dates, you the owner, and you'll make copies that you'll use to file your state, because many states will ask for a copy of the federal return without the schedule K1. So you'll have that, but then when you print out these 5 pages, 1065, you can staple it, and now you are going to add forms to it. So depending on the form that you use, don't know if I'll be able to find it very quickly here, but you will have to add them to it. Let me see if I can find the forms, how to group, how to organize attachments for each. It's not this one here. So you'll group them. Don't think I need to go that far to find it. Should have come across it already. Or probably not. Okay, so let's go up a little bit. I'm not seeing it, then let's go down. I know that I highlighted, so it should be easy for us to find, right? But anyway, when you go through it, if it's important for you, just send me a comment requesting it, and I'll look it up to point you to the page where you'll find the order you should put your information. I mentioned it in one of the videos already, especially the one that is about explaining 1065 instructions up there. So, but you will have, I know for sure, I just don't know where we'll put 1125A, cost of goods, but I know you'll have your 5 pages 1065. And if we didn't use any other form other than what we use now, we will have a schedule. I believe we will have schedule K1 after the 5 pages, and then we'll have form, is it form or schedule? 1125A, cost of the good, cost of good. We will have that, and then we will have schedule B1 if you have more than 50% ownership of the business. and I'm not finding it. But I think if it's important for you to, if you don't know how to organize those papers before you put in the envelope, just send me a comment and I'll look it up and I will put it in the, I'll answer you back in the comment as well. But that's how you'll organize it, and then you'll put in the envelope and you will mail it to the address. You can either certify mail without asking for a return confirmation in the mail, but just tracking it online, or you can just mail it simply using 9x12 envelope, and the receipt, you can ask the post office that the receipt to show the address where the envelope is going, and that will just cost you about $1, and that's that. But if you use the certified mail, it might be about $4.50 or $4.30. So that's pretty much it. And then you just mail your return. Make sure you file before by you file, and if you file your return and mail it by March 16 of 2020. But usually 1065 is due by March 15. And that's pretty much it. I didn't see where they talk about it, but they did talk about it, how you'll organize your file. It's in the description, and I'm sure I thought I highlighted. Okay, here, assembling the return. So you'll have that page 125, which is that 1065, and then here, I think I got it wrong when I said it earlier. If I have put it after K1, then I got it wrong. It should be, or maybe I said it right, I don't remember what I said, but yeah, you'll have that 1065 first, stapled together, that 5 pages, and then you'll have form 1125A. In what we just fill up, we need that file to follow, that form to follow, and then we'll have K1 and we'll have B1. B1 will fall under this category here, so that will add it to it, and that's how that's the order you'll put them in, and then you'll put in the envelope. Thank you for watching. I'm Afiavio Junior Marinet Liberman, creators of Liberman Consulting L.L.C YouTube channel and owners of Nina Soap, and our website is ninasoap.com. I will post the instruction on my website with the highlight in it, so that it can be easy for you to spot those things that we talk about, and it's easy for you to fill up your own tax return if you don't have a lot of information to put in it. But it's very important to track your expenses, your income throughout the year, to make it easy to pull out those information to put in the return. And once your business grow to a point that is like it takes more time for you to do those things by hand, you can purchase a software, a tax software to do your taxes, and it will save you time. The software is not the one that is going to teach you how to file your taxes, but it's going to help you do it quicker, because you already know how to fill it out, and you know what to expect from the software. It will make it easy for you to know which one to work with. If you like if you don't like one, you can choose to another one, but the software will make it easy for you to do it quickly, and it'll be easy when you hire somebody to work with you to show them how to perform those tasks that you don't want to perform any longer. Or if you give it to an accountant to file your taxes for you, you know what to expect, because you have to sign your returns. So if something is a problem with it, it is you that will be responsible for providing those backup to support your deductions. Thank you for watching.